I'd like to welcome personal finance expert and financial commentator Pattie Lovett-Reid to our show. Pattie is known for giving tips on how people can save money and stretch their incomes. Many of you will recognize Pattie from her days as a former senior financial commentator for CTV News, and she also served as senior vice president at TD Waterhouse Canada. I want to welcome to the show Patricia Lovett-Reid. Hi, Pattie.
Hi, Alan. Thanks for having me.
Thanks for coming back on our show.
Always.
I'd also like to welcome Jonathan Chevreau to our show. John is an author, the CFO, and founder of the Financial Independence Hub, North America's gateway to financial independence, the investing editor-in-large with Money Sense magazine, and many of you may recognize John from the personal finance column he wrote at the Financial Post newspaper for 19 years. I want to welcome back to the show, Jonathan Chevreau. How you
Good to
doing,
be
John?
back, Alan. Looking forward to this.
Great to have you. And I thought having the two of you on our show again would be a fantastic way to start off our third year for the Alan Small Financial Show. I can't believe that we've been doing this now for over 2 years, coming on start of our third year now. We've had some fantastic guests, but two of my favorite guests right here with us this afternoon. So I appreciate you both coming on. As always, we're going to have a nice little chat and then play a bit of a true-false game at the end of our conversation and talk about the economy and many other things. So for our viewers today, it should be very, very beneficial. So I wanted to start off with a general comment on the Canadian economy and how the Canadian economy is doing right now. Do you think it's in decline? Do you think it's kind of just petering along, sort of flatlining? Or do you think things are starting to pick up? And I guess the second part of my question would be, how do you think the Canadian economy is faring in comparison to the U.S. economy? And I guess ladies first, as always, on our show.
Okay,
Start off
fair.
with Pattie. What do you think, Pattie? How is our Canadian economy doing right now?
I think the Canadian economy is doing all right. I do think we may have skirted a recession. I'm not saying we're completely out of the woods yet, but the fact is inflation has come down. It's not come down as low as we would like. But when I look at the employment numbers in June, the economy lost 1,400 jobs and the unemployment rate went from 6.2 to 6.4. And I say that because I think even business leaders, everyone's sort of rallying around saying, we want to see more cuts by the Bank of Canada. But if there are more cuts, it would suggest that the economy needs that to sort of continue on the trajectory, which we hope is upward. So I would say we're doing okay. I'm not going to say we've hit it out of the park and we're doing great. John, over to you.
Well, yeah, I think we're kind of bumbling along. I mean, this is not a political show, but I think Mr. Trudeau has started to, outwear his welcome, and I'm not sure the finance minister even has a lot. He has a lot of confidence in her. You hear a lot about appointing Mark Carney or somebody else. So I think between the two of them, it's been pretty disappointing as far as growth. Yes, they've managed, at least the Bank of Canada has managed interest rates relatively well, and inflation is, been sort of under control, so it's not too much of a problem. But I would say it's sort of stagnating, and from an investor point of view, I would think most of the gains would be coming from the U.S. market and overseas, not from Canadian stocks. I mean, you're even seeing, even on the stock side, BCE, the telecom giant, has been a disappointment for investors who were hoping for capital gains. Yeah, it's a good dividend. And it's the old thing about the resource economy and big banks. But we don't have, there's so much we don't have, like, a reasonable pharma, high tech. Yeah, we got Shopify and a few others, but nothing much compared to the Magnificent Seven, which I'm sure we'll talk about before this
Yeah.
session is over.
Yeah.
How do you both think we're faring in comparison to the U.S. economy? Obviously, the U.S. economy, they haven't cut rates as yet. How do you think the Canadian economy is doing in comparison to the U.S. economy? And I guess the U.S. economy, if you think that it's actually doing well, is that a positive for the Canadian economy? I guess we'll go, Pattie, what
Yeah.
do you think?
Sure. Yeah, I think the US economy has certainly outperformed the Canadian economy. That doesn't mean that the Fed hasn't been telegraphing that they're going to be cutting rates. Many expect the first rate cut from the Fed come September. Inflation has sort of come off the boil there as well. But when you look at the strength, and I think John is bang on, the strength of the markets there have really been driven by technology. NVIDIA is like such a classic, like it's just shot through the roof. But when I look at the TSX, I think year to date, it's still up about 9%. So it's been fairly broad-based, the advance. Not all sectors. Telecoms definitely have not participated. The banks haven't really participated, but there have been other things that have done relatively well, but nowhere near as well as the US stock market has done. I'd be interested to hear both your opinions, except I'm taking over control of your show. But the fact is, we're seeing changes, and I think there are some dominant investing themes that we need to still pay attention to, which means Canada may lack, and I'll throw my thoughts out there. In AI, healthcare, trade, I'm a little concerned about, and I've even put down agriculture, innovation there. So, I'm not sure where I'm going to say I am sure we're not where we need to be relative to the US.
Yeah, I agree, and I think Jonathan said it as well in his comments. We seem to be lacking in certain areas of growth that the U.S. obviously has that we don't have. John, I guess, from an equities perspective, we tend to look at and parse through everything the Federal Reserve says, right? In their press conference, in their meetings, et cetera. Do you think the Fed is behind with respect to interest rate cuts? Obviously, we've seen the ECB cut, Bank of Canada cut. We've seen a few cuts in different places around the world. Do you think the Fed is behind in that perspective? And do you think the first rate cut will happen in September? Or do you think, as they've said on their last meeting, it won't happen until possibly close to year end?
Mm-hmm.
Yeah, I don't think that the Fed is behind. I think they've been, relatively prudent. I wouldn't be surprised to see them cut, 25, even 50 in September. But everybody's on tenterhooks right now with the election, and hey, we have the madness in the Trump camp, and now we've got the Kamala, if I'm pronouncing it correctly, replacement of Joe Biden. So I think, and we certainly know, if Trump gets in, you can expect him to really politicize the Fed. I'm not sure whether he's pro power or not, but I expect him, because he showed in his first term that he was quite willing to. He measures his performance by the stock market. Going back to the previous discussion about the U.S. market, I mean, I would say, most of us would, if you were given the option, I can invest in only one market in the world geographically, I think we'd all pick the U.S., would we not? And it certainly wouldn't be Canada. What's Canada? 3 or 4% of the world. On the other hand, with Canadian dollar, we have our most of our fixed income that a retiree would have is going to be in Canadian dollars. Our pensions are Canadian dollars. So from a perspective of currency, you would not want to be all in the U.S. I remember a long defunct discussion forum I was once part of, or actually I ran it. The popular thread was always, the U.S. is the only market worth investing in. I mean, nobody agrees that a Canadian needs whatever 30-40% Canadian stocks and bonds. But that's my take.
Right. Yeah, great take on it for sure, Patty. Like we said, the U.S. is probably doing a little bit better than we are here in our country, but they are starting to see a slowdown, right? Slowdown in job openings, slowdown in job growth, GDP is coming down, et cetera. If they do cut, whether they cut in September, well, let's say if they do cut in September, how do you think that will affect the stock market? Do you think we just shoot up at that point, or do you think it's possibly will be baked in? What effects do you think it would have on the stock market?
You know what? I honestly think it would be baked in at this point, Alan. I really do. A 25 basis point cut is largely symbolic. It's not going to be significant. And I would argue that 50 basis points as well, although I doubt they would go that far. That's just my opinion. So, but it is significant. So on the one hand, investors may cheer, but I think that they're already sort of contemplating this. But it still speaks to the fact that the US economy is slowing down. And, when you look at the numbers, it has held up very well. I mean, it truly has. Our Canadian economy has, politics aside, has done okay. We have not technically slipped into that recession that many talked about. When you straddle the break-even mark on GDP, though, does it really matter if you're up 0.1% or you're down 0.1%? It's still tough. And I think if we talk about how Canadians are feeling, the debt levels, they are still high. Families are still struggling. And 25 basis points, 50 basis points probably is not going to have as big an impact on actual markets, such as the TSX or in the US markets, or even the real estate market for that matter, because the rates are still high enough that the payments are suffocating for some.
Yeah, and it's a great point. And I've said on BNN and I've said on other shows that you're probably going to need to see 3 or 4 cuts before it actually starts to affect people
Yeah.
down. When you get a full point, I'm assuming obviously we're looking at 25 basis points each cut, but when you get maybe up to 4 cuts, then now you're looking at maybe
Yeah.
a prime rate around 6.2. Perhaps you could find prime minus a half on a mortgage. Maybe you're now looking in the mid fives, at least a little bit better than getting in that 6.5, 7% range. So I agree with you. A point, a quarter point here and there doesn't make a big deal until we get a whole bunch, strung together. And maybe, who knows, the April home buyer's market might be a hot one by the time we get to the spring, I guess in 2025 now. Turning to the markets, I know we've had a recent pullback in the markets, although markets are still pretty close to their all-time highs.
Yeah.
Question for you, John. Do you think we're going to see a lot more volatility in the second half of 2024? Or do you think we're going to see the second half a lot like we saw in the first half?
Well, I think I'm sort of surprised the U.S. market has done as well as it has. Now, yes, a lot of it is driven by the Magnificent Seven, and the S&P 493 has been a little bit less impressive. We've also seen in the last couple of weeks a real move to U.S. small caps. So if you have a Russell 2000 ETF, I happen to own one. It's called DFAST, Dimensional. It's done really, really well. So logically, you'd be taking some profits from the Magnificent Seven, and if you want to keep them in the States, then go to small caps, or more likely, good time, not a bad time to add to broken down Canadian positions like the aforementioned BCE or any Canadian bank that's not doing so well, and not to forget EFI and the emerging markets, Europe and the Far East. Particularly, Japan and countries like that. So I think it's from a point of view of geographical asset allocation. I mean, personally, I like asset allocation ETFs, from Vanguard or iShares or BMO or any other ones. Let them do all the work, and you don't really need to worry so much about which country should I be in.
Yeah, no, absolutely. And I guess you mentioned, or I guess you both mentioned technology. So that's been the main driver, right, of the indices, of the markets, North America, really around the world. It's been based on the big tech names. I think we called them already, the Mag 7 or Mag 6, whichever you want, although Tesla has definitely come back up. Pattie, what do you think? Do you think, between now and the end of the year, you think tech is still going to be the main driver? How do you think tech is going to fare between now and the end of the year?
I would still be there and have some in the portfolio. I don't think AI is going to go away. I think it's about how do you embrace it, and it's going to continue to grow. I wouldn't be overexposed, but I have long been a proponent of you don't invest in one country, one currency, one company, one sector. And, like to me, this is an important point. If you've not gone through, as John would say, the asset allocation and made sure that it's aligned to who you are as an investor, time horizon, and risk tolerance. I too like ETFs. We have a variety of different things in the portfolio, but at this point in time, I'm making sure I'm not too exposed to the tech sector, but I'm not prepared to abandon it. That's for sure.
Right. So let me ask you this question then, Pattie. Would you be putting new money to work today? Obviously, Markets are near or at all-time levels. Do you think investors still need to own some of these big cap techs like Apple, like Microsoft, like Amazon? Is that a wise decision for growth portfolios?
I think so. Yeah, I do. And I have new money to commit that we are just in the process of doing right now. I am sticking to the asset allocation that I have in place, and I'm aligning what I'd like to commit to that accordingly. So my answer is yes, but I would love to hear what John says.
Yeah. Same question to you, John. Actually, I want to just change it slightly. I know you and I on previous shows, we've spoken about the traditional 60-40 split. Do you think that is still a good mix for today? And yes, would you be putting new or more money to work in the tech space?
Yes, I mean, on the tech space, I'll get to the asset allocation. On the tech space, I think, I personally, if you've got big gains, I mean, a lot of people will have, what, five baggers or more on the Teslas and Nvidias of the world and Apple and Google, all that stuff. So I wouldn't be putting money into those companies or Amazon right now. If you're already there, be happy and take partial profits if they keep on going up. But I think there's a second tier of AI and tech plays that you could probably find it a little more palatable to buy at these valuations. I'm thinking of, ARM Holdings, which NVIDIA tried to buy, and they were prevented from doing it. Sort of another chip play, or Supermicro, which is sort of data centers, and it's done quite well. And or if you count, I'm not sure if you count as tech, biotech and pharma. I consider pharma to be a form of technology. The weight loss drugs like Eli Lilly, and then what's the other one? Nordisk.
Novo Nordisk. Yep.
Novo Nordisk seem to me to be, what's the difference? It's still technology, isn't it? As far as asset allocation goes, I remember talking to someone at the Globe and Mail had something, I think, almost all the columnists over the globe, they all named VBAL, Vanguard Balanced ETF, as their one favorite, if I could only pick one ETF or investment. And that one is classically 60% stocks and 40% bonds. But it depends. Are we talking retirees? I mean, heck, I'm almost retired, and I've passed age 70. I hate to tell you, Patty.
Great.
Well, I'm not that far behind, so thanks. Yeah.
Great.
You look like you're 20 years behind. I'm sure maybe not quite that much, but yeah, I think, I mean, personally, I expect we're all going to live a little longer than we expect. Inflation's always a problem. Taxation's always a problem. Markets are always going to be volatile. Alan, you asked about volatile markets. I think the markets are going to be, obviously, since Kamala is taking over from Joe, apparently, the U.S. election could make things really volatile. Last week, sorry, a week or so ago, after the Trump convention, coronation, whatever you want to call it, there seemed to be a real Trump trade going on where people, I mean, even Trump's own, what's it called, DJT stock had soared, I don't know what it was, 50, 60%.
Yep.
There's an expectation that Trump would be good for the markets. So does the Trump trade dissipate if they actually see the Democrats making headway? I don't know. It's the only thing, as we know, forecasters can never forecast, is that markets will be volatile, and I don't think they're going to be that stable. There's going to be some good swings, which of course gives you some buying opportunities and opportunities to rebalance.
Yeah, no, for sure, and leads me to our last question for this part of our panel discussion, which is, I guess I'll throw it to Patty. How do you think the presidential election will affect markets as we get closer to the big day in November? We've seen some volatility already, as John has alluded to, but how do you think these markets are going to react as we move closer to the November election?
Well, I will throw in that, of course, I was watching the market reaction to, Joe Biden handing over the reins and endorsing Kamala Harris, and the markets are pretty muted. There certainly wasn't the Trump trade reaction that, you saw investors in anticipation pouring into banks and telecommunications as well as industrials, thinking, a Trump presidency would be good for that. Higher tariffs, less taxes, less regulation, put it all together, and you saw the markets rallying. So, I think, well, first I'm going to tell you it is must watch TV that night. At least it will be for me. And I also can tell you that when I was on CTV, I had written out my entire commentary on a Hillary win, only to have my husband walk into the bedroom at about 2:33 a.m. and say, "Hey, sweetie, you better get up. You got to rewrite that because that's not the way it worked out." And
Yep.
then because I was up, at that point, I watched the markets around the globe and everything shot higher. I was honestly not expecting that immediate reaction. And that's exactly what happened. And that's what went on to happen. So, yeah, I think there's going to be volatility, but for now, until we see, really some substance backing, I think that's going to be somewhat like kind of cautious. Show me what you got.
Yeah, we'll definitely be listening to what the candidates say over the coming months. It's going to be interesting to say the least. And like you said, much must see TV, that's for sure.
You know
Uh,
where I'll be.
yeah, I thought for I guess our second part, we would kind of do a bit of a rapid fire for our segment here for viewers to kind of have some fun with. Kind of a true false. I'm going to make a statement to either one of you, or maybe the same
Oh
statement to
boy.
both of you. You'll tell me if you think it's true or false, or maybe just a quick little line, a quick little reason why you think it is true or false. So let's start off, I guess, with John. Bank of Canada will cut interest rates 3 or more times before the end of the year. True or false?
False.
Okay, why? Why do you think they
Um,
won't?
Well, I think I think we expect one, perhaps late July, and we mentioned already 25 beeps. I think they will keep one more 25 beep shot going. So I would expect two by the U.S. election. Who knows? What happens if there's chaos or civil war in the States in November. Personally, I'm not going to be traveling to the States in November. Put it that way. And so all bets are off. I mean, if it really gets bad and violent, and the Trump assassination attempt suggests that things can get violent and will get violent, then who knows? I mean, there could be all sorts of rate cuts and action, quantitative easing, and God knows keeping the economy and the markets alive in December. But that's too far away to predict. Right now, as you guys have said, it's been pretty stable.
Pretty stable. Patty, we'll change it a little bit for yourself. The Fed will cut twice this year, starting in September. True or false? Patty?
Well,
uh,
yeah, you know what? I'll go, sure, true. I think that they will. I think that, typically you do one, you're not one and done. Because if you do one and then you don't in the next meeting or the meeting after that, it's kind of like, did you make a mistake the first time? Because 25 basis points really isn't enough. So I'll go with the camp that yeah, I think they probably will, with the expectation that we have to be cautious here, as John already highlighted. All bets are off. We could see extreme volatility from many forces that we haven't even thought of yet.
yeah, that's for sure. And I think we will, right? Expect the unexpected, as they say, right? John, what do you think about this statement? Big tech will be the engine that drives markets higher for many years to come. True or false?
Well, I'll take a true on that one. If you define big tech as AI, and but it's not just AI, it's semiconductors, which is a big part of AI. I earlier alluded to, I think I consider pharma to be really a form of technology.
Mhm.
So yeah, the Magnificent Seven, they're all techs, aren't they? I mean, tell me if one of them is not. Tesla is an auto company, but it's really a tech company,
Yep.
autonomous driving stock. So they're all
It's tech.
tech.
It's tech.
It's tech, yeah. I think Elon Musk would say it's tech more so than a car company these days, with all their different businesses that he's
A
involved in
car
for
company
sure.
worth more than all the other big three auto companies put together.
Yeah, yeah. Now I think it's
Market.
what, 800 billion. I think it's back up there. So, um, Patty, this one's for you. I believe the markets will be higher on December 31st than they are today on the back of strong growth from the tech sector. True or false?
Yeah, I have to agree with John. And when he talks about healthcare, I think we have to really pay attention to all of these obesity drugs. They're in their infancy. That's only just starting. And obesity is a big problem. Like it is a real challenge for a lot of people. So you've got that, and so I think healthcare in general, I think AI, I think that as John has already alluded, there are tiers to AI. But AI is not going to go away. It's going to be how do companies embrace it and figure out how to enhance it? And John, excuse me, Alan, quite frankly, here, when you look at our productivity in Canada, we have to improve our productivity. And I think AI is going to help with that, but only if we see investment into it. So back to your question, yeah, I think it will push it higher.
Yeah, so you think that on December 31st, we're higher on the North American indices than we are today? We want to get your crystal ball, like
Yeah,
shine
I love that.
on.
You're going to have me back on December 31st and say, you're wrong. I think that, the markets do not like uncertainty. And I do believe the US election is beyond, you can't even say it's just uncertain. There is definitely a huge bit of from an investor angst perspective. But I do, all right, I'm dancing, forget it. I'm not going to dance. Yes, I think they're going to be higher.
Well, I will dance with you because I agree. I think we will be higher.
Well, I needed a dance partner. It took you
That's
long
it.
enough.
I'm your dance partner. I've said many times markets will be higher.
I do.
Obviously, we don't know for sure. We don't have that crystal ball, but the way things are going, it looks pretty promising. We may see a correction. I think it would be healthy to see a correction. We're entering that period of time, August, September, when we do get corrections in the market. But after that, I think we could see, based on, I think, interest rates coming down further in, I guess, the last quarter of the year, whether it's US and Canada or not, I think we will have higher markets. John, this one's for you. A bit of a different question here, or maybe a different slant on the same question. Do you think, so I'll say it from the true false perspective, of course, markets cannot move higher without big cap tech participating in the rally? True or false?
Yeah, that's true. I think we've covered that. I mean, technology, again, I look at technology in the broadest sense, not just the people making the chips and the AI stuff, but the companies who are using technology. So the company, I mean, companies that are basically becoming more productive. Whether that means they're going to have a lot of job losses is a separate question. But you got all these traditional companies like that are starting to be perceived as AI companies like Oracle and IBM. I think Kathy Woods in the Globe earlier this week had a piece talking about Shopify she felt Shopify in Canada was a bit of an AI play as they help all their small business customers with it. So defined broadly as AI plus semiconductors and pharma, unquestionably this is it's the information economy and the AI is at the forefront of it. So yeah.
Patty, what do you think? Do you think that if tech falters, banking, oil, industrials, other sectors, pharma, do you think they could pick up the slack for perhaps a slowdown in the tech sector?
Maybe collectively, but not independently. I think I 100% agree. The problem, or not the challenge, the problem is the challenge. We know that particular sector is broad-based, it's far-reaching. Yes, we will see it, but yeah, no, I think it's going to be led by tech, and I think tech needs to be there, and I think it's going to be broad-based, and it'll bring the others along with them.
Yeah, and I agree with both of you on that. I think tech is here. It makes up almost half the S&P 500 at this point in time, and I think you're going to need tech to participate, even though many try to say otherwise, and other sectors are joining in on the party. If tech pulls back significantly, it will be difficult. We're coming to our final true-false question. I'll throw this to Patty first. Investors, if they have money available, should always put it to work for themselves because there is always a bull market somewhere. It is the investors and investment advisors' job to find that opportunity. True or false?
True.
Too simple.
No,
Good.
listen, I want my money to work as hard for me as I work for it. I have to be realistic. I don't want to be overexposed to the equity market, but I need exposure to the equity market to keep up with inflation, to keep up with my cost of living. I know that if I'm in the equity markets, realistically, I want to have at least a 5-year time horizon, which is why I want an asset allocation that says, okay, you've got some money in cash. You don't need to disrupt good quality investments that you're holding for a long term because the markets are going through some outrageous, ups and downs in a particular period of time. So if I stay true to that, when I have new money, I'm committing it to my asset allocation and I'm sticking with the plan. That's what's going to drive my results, I believe.
Fantastic answer. John, what do you think? Is there ever a
Oh, go
time
ahead, John.
you want to hold back ever, or it's just full steam ahead? What do you think?
Yeah. Well, keep in mind if you're a retiree and where you are and your own risk tolerance, etc. I think we all know that there's always a bull market somewhere is Jim Cramer's
Yes.
slogan every day.
That's right.
A
That's
lot of
right.
people, a lot of journalists like to slag Kramer, but I find him actually fairly insightful. And remember that even Kramer, who's notorious for stock picking, tells people, U.S. investors, to have their first 10,000 in a diversified S&P 500 index fund. So there's room for both stock picking and for asset allocation. I just going back to the tech thing. I mean, I think Patty said earlier. I mean, yes, you need some exposure to, but nobody's saying that's the only equity you want. I
Right.
think if things do get a little rocky, or even anticipation of rockiness around November, remember the defensive sectors, which are traditionally utilities, consumer staples, and healthcare. I think that you want to have, not all those sectors in Canada, certainly utilities are. So it's our old friend asset allocation, not just geographic, but asset classes. And we haven't even talked about gold and crypto. One thing I would say is crypto is doing quite well right now because Trump is getting behind it. And if you expect Trump to win, then crypto will probably do well as well. So
Yeah,
that's my thoughts there.
he's the keynote speaker, I think, coming up at a crypto convention or something I read. So interesting because I think he's changed his tune there. I know his running mate is crypto has been talking a lot about crypto. So should be interesting. Well, I think we've come to the end of our interview, our panel discussion. I want to thank you all for giving viewers a real treat. You both are a wealth of knowledge and are fantastic guests. Love to always have you on. You shed a lot of insight to all of our viewers, and I think everyone has learned hopefully at least a little bit today, if not a lot. We covered a lot of information. So once again, I want to thank you both for joining me on my first show of the new season. And I look forward to having you both back again sometime down the road.
Thanks, Alan, and congratulations.
Thank you. Thank
Yes,
you,
and have a
Ron.
great third year.
All right. Take care, everybody. Bye-bye.